In this video, I'm going to discuss the advantages and disadvantages of having an S corporation. So one of the advantages is that there's limited liability for the owners of the S corporation, who are called shareholders. In this respect, an S corporation is similar to a C corp. Okay, so you basically have the corporation is a legal entity that is separate from the shareholders. You have the corporation, and then you have its owners, the shareholders. Okay, so if somebody were to sue the corporation and they want to come after the assets of the corporation, they can do that, but they can't come after the personal assets of the shareholders. Okay, so there's this separate distinction. The shareholders are not responsible for the debts of the S corporation. However, similar to a C corporation, you have to file articles of incorporation in one of the 50 U.S. states to create this separate legal entity. Okay, so there's some paperwork involved. You're gonna have to pay a filing fee and so forth. Okay, now similar to a C corporation, you also have an unlimited life. You are creating a separate legal entity, and with an S, with a sole proprietorship, for example, the business dies with the owner. But that's not the case with a corporation. Okay? Now, similar to a C corp, you're also going to have state regulations. You might have to file an annual report or pay certain fees and stuff to maintain your corporation. Now, different from a C corporation, the S corp only has one layer of tax. It is a flow-through entity similar to a partnership, a sole proprietorship. So there's not two layers of tax. There's no double taxation issue. So one of the main advantages of an S corp over a C corp. Okay, so it's not like the business is taxed and then the shareholders are taxed on dividends. It doesn't work like that. There's just going to be one layer of tax. However, another disadvantage is similar to a C corporation. When you distribute property, when you take property out of the C corporation, like if it's appreciated property, for example, you bought it for $100,000, now it's worth $200,000, it went up in value, it could trigger tax, right? You could have a gain. And if you take property out of the S corporation that's lost property, like, it was worth, the basis was $200,000, but now it's worth $50,000. You say, oh, I have a loss, but in some cases it can be disallowed. So basically, what any type of corporation, S corp or C corp, it's not easy taking property in and out with in terms of tax ramifications. Now, one of the main advantages of having an S corporation is self-employment taxes. You can dramatically reduce your self-employment taxes. Okay, so for example, let's say the S corp, I'm going to try and give a real simple example. It has like $100,000 of profit. And you say, okay, well, what do I do with this $100,000? How does this affect the self-employment tax? Well, if the amount, you have to pay yourself a salary. You need a reasonable salary. Okay, so let's say you pay yourself like $60,000. Okay, as a salary. Now you have $40,000 left. So that $40,000, okay, that's just the profit of the S corp that is not your salary. Okay, that is not subject to self-employment tax. The amount you get for your salary, that is, you have to pay, Social Security tax, Medicare tax. But just your share of the corporation's profit, that is not subject to self-employment tax. So S corp is a great way to reduce your self-employment tax. It's the only entity type that is going to give you this benefit. Now, the one downside, so when you think about like an S corp versus a partnership, you do not get special allocations. Remember a partnership, you say, okay, well, we got two partners and 50-50 partners, but one of them's going to get 100% of the depreciation deductions. We set that up in our partnership agreement. You can't do that with an S corp. With an S corp, everything has to be pro rata. Okay, everything has to be pro rata. So if you own 50% of the S corp, you can't say, I'll take 100% of the depreciation deductions. Okay, so that's a disadvantage of an S corp relative to a partnership. Okay, now, when we think about creating an S corp, remember you have to make an election. Okay, if you create a corporation, you're automatically a C corp, and then you have to make an election to become treated as an S corp. Okay. Now, there's a bunch of restrictions on who can become an S corp. You don't just say, hey, I'd like to be an S corp, and that's it. Okay? You can have a maximum of 100 shareholders. Okay? And there's a limit on who can be a shareholder. A C corporation cannot be a shareholder. It can't be one of those 100 shareholders of the S corporation. You can't have a partnership as a shareholder. You can't have a non-resident alien can't be a shareholder. So, and if you don't maintain, so if you say, okay, well, I take this election and I meet the rules, but then later you go above 100 shareholders. Now you just revoke the S corporation election. It's no longer in an S corporation. Also, an S corporation, another disadvantage is you can only have one class of stock. So you can't be like, oh, well, we've got this common stock, and then we've got preferred stock, and so forth. So these are all disadvantages. In particular, these are reasons you would go and say, well, I'm going to do a C corp instead. For example, if there's a company that's going to go public and you're doing IPO and you need to raise money, you say, I can't have all these restrictions. We need a lot more than 100 shareholders, and we need anybody to be able to be a shareholder. Okay, so these are significant disadvantages of having an S corp. Now, also, there are a handful of states. Okay, there are a handful of states that do not recognize an S corp. So basically, you create it and you say, well, hey, the IRS recognized I made my election for my federal taxes. I'm an S corp, but there are just a handful of states that say, you know what? Even if you are an S corp, we're going to treat you like a C corp for tax purposes. So you want to make sure, if you live in one of those states, this could be the S corp isn't going to provide as many advantages to you, at least in terms of your state taxes.